Hi everyone, welcome to my channel. In this video, I will be covering on the two accounting methods. The two accounting methods are cash accounting and accrual accounting. The main difference between these two methods is the timing in which transactions are recorded. Cash accounting records transactions exactly when the cash enters or leaves the bank account. So in cash accounting, revenue is recorded only when cash is received, and expenses are recorded only when cash is paid. This method does not recognize any accounts receivable or accounts payable. Many small businesses opt to use a cash basis of accounting because it is simple to maintain and easy to understand. It's easy to determine when a transaction has occurred, and there is no need to track receivables or payables. Cash flow is one of the top few most important aspects in which business owners make analysis on for business decision. The cash method is also beneficial in terms of tracking how much cash the business actually has at any given time. This means that whenever you look at your bank balance, you know exactly what resources are at your disposal. Cash method can be cost efficient as well because due to the simplicity of this method, you can even do your own bookkeeping in Excel, which means this is cheaper than having to spend money on sophisticated accounting software for your bookkeeping. Also, you can do bookkeeping by your own rather than hiring a qualified accounting for this purpose. Cash accounting is generally acceptable in most jurisdictions if the revenue is below a certain threshold and if there is little or no inventory. Hence, this method is more suitable for small and simple businesses that are cash-based. Do check out on the regulations in which your business is operating in before you proceed to use the cash accounting method for your business. Let's take a look at accrual accounting. In accrual accounting, it doesn't matter whether cash is received or paid. Revenue is recorded when it is earned, and expenses are recorded when they are incurred. This method is more complicated to implement than cash accounting since it's necessary to account for items like unearned revenue, prepaid expenses, and accrued expenses. As a result of its complications, this method is at times more labor intensive. You will need to hire a qualified person to help with the bookkeeping and pay for the use of specialized accounting system. The upside of accrual accounting is that it gives a more realistic idea of income and expenses during a period of time, therefore providing a long-term picture of the business that cash accounting can't provide. Downside of the accounting is that it doesn't track cash flow and as a result might not account for a company with a major cash shortage in the short term despite looking profitable in the long term. Accrual accounting is widely accepted by regulations in most countries and are popular among larger businesses and also inventory-heavy businesses. This method is very useful for businesses that accept credit as their payment term. Let's take a look at an illustration to further understand the difference between these two accounting methods. Let's say in the month of January, Bob the farmer pays a visit to his neighbor James and sells 10 kg of soybeans to him. Here, James would like to take the soybean first and pay on the following month. Let's see how this transaction will be recorded under cash and accrual accounting methods respectively. Under the cash accounting, as the revenue is to be recorded only when the cash is received, Bob does not need to record anything in January since he did not receive the cash from James. On the other hand, under accrual accounting, even though the cash was not received yet, Bob has to recognize the revenue when it is earned. So, the journal entries to record this transaction will be debit accounts receivable as cash is not yet received and credit revenue. In the following month, February, James paid Bob $100 for the soybean that he got from the previous month. Let's take a look at how Bob's revenue will be recorded differently under cash and accrual accounting. As Bob only received the cash in February, under the cash accounting, he has to record the revenue transaction in February. Here, he will debit cash and credit revenue. Straightforward. On the other hand, under the accrual accounting, as revenue has been recorded in January, When Bob received the money from James in February, the journal entry to record this receipt will be debit cash and credit accounts receivables. Let's take a look at how expenses will be recorded differently under cash and accrual accounting. Assuming Bob has received the January's utility bill on the 31st January and he paid the bill on 14th February. How should Bob record this transaction? Under the cash accounting, since Bob has yet to repay the utility bill in January, he does not need to record anything in January. On the other hand, under accrual accounting, even though he has yet to pay the bill in January, Bob has to recognize the utility expense when it is incurred. So, in January, he has to record a debit to utility expense and credit to accounts payable as the bill is not yet paid. What if Bob was to receive the utility bill on 1st February instead of 31st January? Would the journal entries be different? Well, there is no difference under the cash accounting method because there is no cash paid in January. However, under accrual accounting method, even though the utility bill was not received by January, the utility expenses has been incurred, so Bob has to record this expense in January. Could use the average amount of utility expenses incurred in previous months to get the best estimated amount to record in January. And instead of crediting to accounts payable, he will have to credit to accruals. Let's take a look at the first scenario where Bob received the invoice on 31st January. In the month of February, when Bob paid for the utility bill, he would record the expense in February under the cash accounting method. On the other hand, under accrual accounting, as the utility expense has been recorded in January, when Bob makes the payment in February, the journal entries to record this payment will be debit accounts payable and credit cash. If you have any topics that you'd like me to cover, feel free to leave a comment below. I hope you find this video useful. If you like this video, remember to click on the like button. Thank you for watching. Bye!